G20 finance ministers are meeting in Argentina to address commodity prices. They're concerned about volatility. Now, you may recall food prices have broken 2008 records since about late 2010, according to the United Nations. Really been rising, continue to be on the rise. And in the spring, World Bank President said the world is climbing out of crisis, of financial crisis, but that the risks of high and volatile commodities prices were threatening that. Now, the World Bank also has just released a report saying the U.S. dollar's dominance will be done by 2025. So a lot of news coming out, and earlier I spoke with Peter Schiff to break it all down. He's president of Euro-Pacific Capital, and I asked him what's behind the volatility of commodities, because there are a lot of factors that go into it. Some of them are crop failures, and of course investor speculation is a big one. Here's what he had to say.
All these countries are printing too much money. They're all debasing their currencies. Of course, we are the leader. The rest of the nations seem to be following in our footsteps, unfortunately. So since so many central banks are creating so much money, commodity prices have no place to go but up. And the more money they print, the higher prices are going to go. You know, obviously volatility is part of a market, and when you get these huge bull markets that these countries have caused by their irresponsible money printing, you're going to also have greater volatility. And if they want to put an end to the upward trajectory and the volatility, they need to turn off the printing presses. They need to let interest rates go up. But unfortunately, a few foreign governments or the U.S. government are willing to do that.
So you're blaming quantitative easing for the rise that we've seen in commodity prices. To what extent, though? I mean, because there are other things that go into food prices, like the problems that have happened with crop failures and fires and that sort of things that aren't speculation. To what extent do you think that speculation is driving this rise in the volatility that we're seeing now?
Well, I think overall the speculation might help smooth out the volatility, but certainly there are times when the speculators add to the volatility, and I think we're in that time period right now, but the underlying trends are not being driven by the speculators. The speculators are attracted to these markets because of the trends. But they're not causing the movement, and they're along for the ride, and in many cases they help provide excess liquidity, which would smooth out the volatility.
So if quantitative easing and easy money is what's responsible for the rise of commodities, isn't that driven by the investors that are taking that easy money and investing them in commodities?
Well, some of it, but of course, what is the source? The source is the easy money. If the money wasn't flowing so freely from the central banks, the speculators wouldn't be buying. But I do think most of the commodities are being bought by end users. It's not that corn or wheat is all being warehoused somewhere. It's being consumed. It's being used, and people want to blame it on the weather, floods or droughts or whatever. I mean, this happens all the time, and there's always problems with the weather, and politicians always want to blame things on the weather. I mean, remember, in the old Soviet Union, the Soviet Union used to be the breadbasket of Europe, and as soon as the communists took over, every year there was a drought. There wasn't a drought, it was communism. That's why there was no agricultural output. That's why they had to get grain from us, because the communists destroyed all the free market incentives to farm. And now what's happening is you have politicians printing money, debasing our currency. The natural consequences that prices go up, but rather accepting responsibility and saying, hey, this is just the consequence of quantitative easing. If we want to prop up real estate prices, well, then we're going to have high food prices. We're going to have high energy prices. They don't want to admit that, so they want to vilify the speculators, go after OPEC or the oil companies, or blame it on factors beyond their control, like the weather.
Okay, along the lines of what you're saying, as far as devaluing the currency, the U.S. dollar is something that is the subject of a World Bank report that's just come out saying that it does not expect dollar hegemony in 2025 is the date that they've set for the dollar to just play a role in a multi-currency monetary policy that includes the renminbi from China and the euro. We've heard this from many people, investors. You might be one among them, but I haven't interviewed you, but I know Jim Rogers, George Soros, all have talked about the decline of the U.S. dollar as the reserve currency. Is it significant that the World Bank is saying this, and is it significant that they're giving a date?
Well, I think that they're pulling the date out of a hat. I mean, there's no way to know. I know that the current system is unsustainable. And the longer the world tries to preserve the U.S. dollar as the reserve currency, the worse the global imbalances are going to become, the more inflation the world is going to suffer. So the sooner the world understands this and looks for an alternative, I think gold is the best alternative, then we can begin to tackle these problems. Of course, when that happens, America's ride on the global gravy train comes to an end, and we're going to have to get used to living within our means, which our means have been dramatically diminished over the years because of our industrial base basically having disintegrated due to high regulation, high taxes, cheap money, all the things that we've done to undermine our economy. But as far as I'm concerned, the sooner that happens, the better, because the longer it takes, the worse these imbalances grow, the fundamentally weaker our economy becomes, and the harder it's going to be to rebuild a viable economy. So the sooner the world wakes up, it's actually going to help America, even though we're going to have to experience a lot of short-term pain to get from where we are to where we need to go.
That's something I wanted to ask about, because the report says that the larger role for the renminbi would resolve China's heavy reliance on foreign currencies. Uh-oh. Is that the U.S. dollar? Does that mean the U.S. dollar is doomed? It's not going to have a customer for all of its treasuries anymore?
Well, China is not relying on the U.S. currency. They're stockpiling it. The U.S. currency relies on China to prop it up. I mean, people keep saying that China has an export economy. They don't. They have a production economy. The fact that they export their production is their loss. If they simply let the dollar fall and their own currency rise, they would still produce, except it would be the Chinese who would enjoy the products that are being produced instead of Americans, and the Chinese economy would be much stronger. And instead of investing all their savings in treasuries where they're basically squandering them, they can invest more productively in improving their own plant and equipment and their own efficiencies and have an even more vibrant economy than they have today.
In that scenario, though, is the U.S. kind of out of luck? Because the United States does rely on China to be the buyer of U.S. treasuries, of U.S. debt.
Well, our politicians are out of luck. I mean, the central planners, the welfare state advocates are out of luck. But I think ultimately, as I said earlier, the best thing that can happen to the U.S. economy is for the Chinese to cut us off. It's like we're drug addicts, and they're the enablers. They're supplying the drugs. Cut us off so that we can sober up. It's not going to be pleasant for a lot of people, but it's necessary. And the sooner we begin the process, the sooner we can begin building a real economy. And I don't like all this money going from China, the Chinese government, to the American government, because all that does is undermine our capitalist system. It grows the government at the expense of the private sector, and it fundamentally weakens our economy. Sure, we get a few more trinkets, we get to buy more products, but we're selling our souls to the devil. Really quickly,
I want to just touch back upon commodities, because there was something I wanted to ask you about that just really quickly. We've seen this rise in commodities. We also are seeing a rise in U.S. farmland, up 20% in the first quarter of this year. What's driving that? Is that having to do with commodities and speculation?
Well, no, I think it's good business. I mean, I think farmers are making more money despite the fact that it costs more to grow your crops. So you're getting more money for them. I think probably agricultural exports are going to increase, and so there's legitimate demand. I mean, this is not speculation. There might be some speculators who are specking on farmland, but from what I can tell, you can buy farmland, you can either farm it yourself or you can rent it out, but there's real income there. And I've said, if you're going to buy real estate in America, you better be able to farm it or mine it. But don't buy it if you're planning on building a house on it, because that'd be a complete waste of money.
That was his advice. You got it from Peter Schiff, president of Euro-Pacific Capital.